So, you want to start investing in Ghana, but where do you even begin? It can feel like you're just lost in a sea of options. Well, you're in the right place. We're about to cut through all that noise with a super clear, simple roadmap to help guide your financial journey.
Look, I get it. It's totally overwhelming, right? You see all the ads, you hear people talking about stocks and T-bills, but it's just so hard to know where to actually start. And that confusion, it usually leads to doing nothing at all. That's exactly what we're here to fix today.
We're going to frame this whole thing like a play, broken down into 3 simple acts. First, we build a solid foundation. Then we expand our horizons. And finally, we'll explore the frontier. So let's get this show on the road with Act 1.
All right, Act 1 is all about the foundation. You know, every great journey has to start with a first step on solid ground. This is where you build that security with low-risk, managed options. Honestly, for most people just starting out, this is the perfect place to begin.
For your foundation, you've really got 2 main players: managed funds and treasury bills. With managed funds, you're basically letting the experts handle all the tough decisions. And with T-bills, you're lending money to the government, which is about as safe as it gets. Both of these are designed for one thing: stability.
So what in the world is a managed fund? Well, think of it like putting your investments on autopilot. You put your money in, and a professional manager invests it across a whole bunch of different things for you. It's the perfect set-it-and-forget-it approach if you're a beginner.
And getting started is way simpler than you might think. It's really just a 4-step process. First, download the app or go to the website. Second, sign up and do the identity check. That's the KYC or Know Your Customer part. Then you fund your account. And finally, you just choose a fund and make your first investment. That's it.
Now here's a really smart way to use these kinds of investments. Think of a managed liquidity fund as a high-performance parking spot for your emergency cash. It keeps your money safe, you can get to it when you need it, and it often earns you a much better return than just letting it sit in a normal savings account. Okay, let's move on to Act 2, expanding horizons. So once your foundation is secure and you're feeling a bit more confident, you might be ready for the next stage. This is where you start to take a more active role by actually owning assets directly, which, opens the door to potentially higher growth.
In this act, we're talking about things like owning shares in local Ghanaian companies, or maybe even global giants. You can also dip your toes into the real estate market through this really clever tool called a REIT.
Now, a key decision here is whether you want to invest locally or globally. Investing on the Ghana Stock Exchange gives you a real stake in the local economy. But then again, global investing apps give you amazing diversification in dollar-based assets. But they do come with currency risk. It's really all about finding the right balance for you.
So, how do you invest in property without being a millionaire? Well, that's where a REIT comes in. A REIT, or a real estate investment trust, is basically a fund that owns properties like office buildings or apartments. When you buy a share, you're pretty much becoming a landlord and earning rental income without any of the usual hassle.
So here's the big takeaway for this one. If you're thinking, I'll never have enough money for a down payment on a house, hold on. Don't write off real estate completely. REITs are a super practical and accessible way to start building wealth through property.
All right, time for Act 3, the frontier. Now, we're entering high-risk, high-reward territory. Let me be absolutely clear about this. This stage is only for experienced investors who are comfortable with the real possibility of losing money. This is not a starting point.
The 2 main options we're talking about here are direct business investments, like investing in a friend's startup, and cryptocurrency. Both of these require a deep understanding of the risks and a really strong stomach for volatility. This is a crucial warning, so please listen up. Investing in a private business is nothing like buying a public stock. The risk of failure is incredibly high. If you choose to go down this path, you have to do your homework. Scrutinize the business plan, demand regular updates, and please use legal contracts.
Now, when it comes to crypto, the key word is allocation. The general consensus among experts is that for most people, crypto should only be a very small, speculative slice of your portfolio. Never, ever bet the farm on it. We're talking maybe 1 to 5%, absolute maximum.
So, we've walked through the 3 acts of our investment roadmap. Now, it's time to bring it all together and figure out which stage is the right one for you to start at.
This table right here it sums it all up perfectly. If you're a beginner, you start in Act 1, no question. If you're looking for more growth and you've got your foundation set, you can explore Act 2. And only if you're an experienced investor with money you can truly afford to lose should you even think about venturing into Act 3. Go ahead and find your starting point on this chart.
At the end of the day, the most important step is always the first one. We've given you the map, we've given you the compass, so now the only question left is, where will your journey begin?